Hey guys, Scrub here. Today we're going to drop a quick video about how to stay in trades longer and not leave as much profits on the table. Before I start, if you learned something from this simple trick, please do me a favor and hit that sub button and drop a like. It would be super appreciated. All right, so let's get into the actual video. So the trick is pretty simple in itself, um, but it's often extremely overlooked. So the trick is it's watching how the candlesticks are plotting and making sure to enter and exit your trades only when the candle is actually formed, never when it's still forming. Okay, so let me give an example of what that means. So let's say we've already figured out our profit taking levels and our pretty much our traditional support and resistance and our supply and demand. So here's our profit taking levels to the upside, and here is a support slash where you will be getting out of your trade, so a stop loss. So if you're unaware of how to find any of these levels, I made some videos on them. I'll drop a link in the comments below. I'd highly recommend watching those if you are still struggling finding these key levels. So let's just say this is the resistance that you're trying to trade the breakout, right? First, you need to make sure that there's actually volume coming in. You always need to have volume when trading breakouts. Next, you want to make sure it's not a false breakout and the price action is actually holding that level. So here's the initial impulse up, and then here's the hold. That's very important. We must hold the level, or we're going to potentially just get a fake out and just going to reverse on us. A lot of time people will just be super impatient and immediately enter, and then the price action just reverses on them and they just take a quick loss, right? So the candles must stay above that resistance level and hold, thus forming a new support level. Once the price action holds for at least 2 minutes and it's holding where you want, so it's basically forming this new support level. This is when you want to actually look to enter. Never before wait to the actual confirmation of the candles holding, right? So I usually enter on the 1 minute time frame and wait for the previous candle to form and see how the next one is plotting. So this one, plotting above its previous predecessor, which in case this is doing, that's a good indication that price action will continue higher. This is where we would be entering calls when that happens. Once this is formed and held for at least 2 minutes, we would be entering on the 1 minute when the next candlestick is plotting above, right? So this is a good indication because usually what happens is if the candlesticks plot one above another for for bullish sentiment, that's a good indication that we're pretty much going to keep going higher. Vice versa, if they're plotting one below each other, that's a good indication for staying in your puts for bearish sentiments. So then once I'm actually in this trade, I will stay on the 1 minute to kind of monitor how each candle is plotting. And then I will stay and pretty much watch the 5 minute, the 15 minute, and the hourly time frame to actually see the overall direction of whatever stock that I'm trading. So if all the candles keep plotting one above another, we have absolutely zero reason to exit our trade, right? Absolutely zero reason. So this way we can kind of not get faked out nearly as much. And then we would pretty much stay in our trade until one of two things happen. So there's two instances of where we would be wanting to get out of our trades. First is if we come into a resistance area, which something kind of like this, we come into a resistance area, we want to start taking some contracts off the table to lock in our profits in case price action ends up reversing. Then once we have our profits locked in, we would leave runners. So what runners would be, so let me give an example of what that would mean. Say we're in 3 contracts here and we hit the resistance level. This is where we want to be taking 1 or 2 contracts off the table to lock it in. So we would leave the rest to what is known as running. So they would run. So if the price action continues to go upwards, we can still capitalize on that and not really leave much profit on the table still. The next scenario of why we want to exit our trades is if we start seeing some bearish candles forming. So if you see something kind of like this, let's just say if you see 2 bearish candles in a row, that's a good indication to start cutting some of your contracts to reduce your risk in case of possible retracement. Never just assume that the stock is going to bounce. The stock market doesn't owe you a thing. It will do whatever it wants. So don't ever assume, don't have a one directional bias. I like to be safe than sorry, truthfully. So lastly, there is something known as a neutral candlestick plotting. So what that would look like, so let's just say I enter here and we keep going up and up, but then we see a neutral candlestick. So something kind of like this. Now, 2 things can happen here. So the first thing, it's either saying, hey, we're creating a new support here and we're going to potentially just keep on going up, right? So that's the first thing. The second scenario is giving you a heads up in a sense, saying, hey, the bullish volume is kind of stalling out here. We're running out of steam. We could potentially retrace. So what we could be doing is seeing something kind of like a neutral candlestick and then a bearish candlestick right afterwards. So this is when you want to be wary. You don't want to just exit just yet because you see a one red candle. You could easily get faked out and the price action can just, reverse on you. So this is just giving you a heads up of when to potentially, cut, and just giving you an indication just in case. So when you see that second bearish candle, that is kind of a, hey, you should probably, cut some of your contracts just to minimize any of your risk in case the price ends up dropping further, right? So I really hope this video helps and makes sense. It's very, very, very important to actually wait and see how these candlesticks are plotting. If they're plotting one above another, kind of like this, and you're in bullish calls, you have no reason to get out. Absolutely no reason. We already deemed the only 2 reasons to get out. If you start hitting a resistance and taking your profits, or if you start seeing kind of a reversal. Those are your only times you need to get out of your trades. So kind of my last tip to you guys, say if you're entering on the 1-minute time frames, you must wait that full 60 seconds. Don't just enter because you see something like, let me give you an example. Let's just say you see a massive, volume spike and you're entering right here at say 35 seconds into the actual candlestick that hasn't been plotted yet. And then once the actual 60 seconds comes around, this is no longer here. You're actually going to get a little wick. And then the actual body forms down here, right? Something kind of like this. So you're in a sense getting faked out and you didn't wait for the full 60 seconds. So you're getting a horrible entry and you're paying more of a, you're paying more premium. So you're paying more for your contracts. Very, very important to wait however long you like to trade. If you like to trade for 3-minute confirmations, if you like to trade for 5-minute confirmations, everyone is different. Me personally, I like to enter on the 1 minute after I see 2 minutes of pretty much candles holding above my level. So in my case, I need to see 60 seconds worth. If once this has been plotted, I will then enter the next candlestick if it's plotting bullish. If the next candlestick is plotting bearish, so something like, something kind of like this, I am not entering just yet. I'm not getting faked out. I'm not going to enter that. I'm only entering if I am bullish, if it's plotting above. If it's starting to plot below, or if it's plotting neutral, I'm holding off. I'm going to be patient. So just be aware that you must wait for confirmations. You must wait for the candlestick to actually close and form, and then wait to see how the next one plots. If you're bullish, it's got to plot above. If you're bearish, it's got to plot below. And then just pretty much monitor your trade with the 1 minute, the 5 minute, the 15 minute, and the hourly. Hope this video makes sense. If you have any questions, please feel free to drop a comment below. Thank you for watching. Stay tuned for the next video. Thank you again, guys.